Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Tuesday. It's the 10th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address is rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. We'll start off with a high-risk investment warning. Okay, and just bringing up our commentaries disclaimer. I'll keep this on screen for a few moments. Good morning, Raj. Nice to have you on the webinar. Hello, James and Kim. Pleasure to have you both on the webinar. Thank you, everyone, for signing in this morning. Hey, Indran. Good morning to you. And here is our references, MarketScope 2.0 and TradingView.com. All right, let's just go through to TradingView.com. And yields are down. Okay, the bond market was actually closed yesterday, so I just want to understand how we get this candle here, but maybe there's some sort of automatic down, so the real yield has come down. You can see that the overbought condition on the daily chart has normalized somewhat. If we go through to the weekly chart, it's still overbought, so still some scope there for consolidation or pullback. And of course, if we go to the influential monthly chart, then let me just press it again. You can see we're still overbought. But on the daily chart, the normalization seems to have kicked in somewhat. I want to just double check the price of the bonds themselves. So let's go to IEF. Let's double check what's going on there. Okay, and you can see this big gap open. And let me just take the drawings out. So let's just understand the price of bonds have jumped up. There's a demand there. Remember, our suggestion was, and it remains to be seen, that there is potential value in the bond market just because they've been hammered. If the price of bonds comes up, real yields come down, I am of the opinion that we won't get a V reversal. The reason that I suggest that is V reversals are extremely rare. We did have one with the beginnings of the COVID lockdown period. There was a V reversal there, but they're few and far between. Nevertheless, bond prices have gapped up here. And if we go through to our 10-year, so we go to the 10-year, this is the nominal, it's not the real rate, the nominal. Okay, we're sitting at 4.66%. And if we just go through to the real, so just add, just subtract, I beg your pardon, the break even, okay, to get your real rate. And you can see that it's come down to 2.37, but I beg your pardon, 2.35%. So let's just understand what we're building this morning. Yields coming down. Yields coming down. Why is that important? Yields tend to be dollar supportive. Okay, so if yields are coming down, then perhaps a loosening up in the US dollar. What's the US dollar? The US dollar is the safe haven of choice. So if the safe haven of choice is loosening up, perhaps we're starting to see some risk on activity. Okay, so we started with the real yield, saw that the yield's coming down, extrapolated that to the US dollar, suggesting it may come down, and if it comes down, risk on activity. All right, let's go through to MarketScope now and just test this hypothesis. Okay, so the US dollar, just starting from the weekly, is showing signs of uptrend. But what we're saying is that the dollar may be, at least in the near term, capped. Okay, and if you take a look at last week's candle, it is a gray zone doji, which is a bearish candle. This week's candle, it's only Tuesday, right? But as it stands right now, is a doji as well. So a bearish candle marked by uncertainty. Bulls, bears, not really gaining much ground here. But if there is some sort of movement down in the yields, it's not really a surprise to see a relative weakness in the dollar. What do I mean by relative weakness? So we're looking at the zones effectively as our map, as our coordinates, so to speak, and you've moved from zone 1 into zone 2, that relative weakness down. Okay, so there has been a step down by the US dollar, and now we're getting some blue. Okay, so just let's unpack the hypothesis. Yields down, okay, pressure on the dollar, potentially risk markets to be supported. There is a movement from zone 1 into zone 2, and now it looks as if we're getting some sort of rally in the US dollar. So what we can do is we can start monitoring resistance areas. Okay, we can start monitoring the resistance areas because it does look like the higher time frames showing some sort of strain on the dollar. If that is the case, the central pivot obviously becomes a level of interest. If that doesn't hold prices, then the R1 pivot area, so our kind of resistance areas here. Okay, so we'll still take a look at the central pivot, but then potentially hitting into R1 and then pushing down. Now, let's say another thing about the dollar. We have mentioned that it is a safe haven. If there is any escalation in the Middle East, it could drive capital flows into the US dollar. So understand that we are operating in a environment that's now got an extra variable in it. It's a very sensitive variable, so the risk has shot up meaningfully. That means that the the uncertainty is up, risk is up, means that there's no room for mistakes in terms of stop losses and risk management and money management. Those must be on the forefront of your minds. But nevertheless, it does seem as if the markets are looking for a risk on type of movement today. It does seem that way. So if that's the case, we can take a look at central pivot or the R1 and don't predict. Just make sure you get your whatever signals you use on your trading plan, just make sure that those get triggered. Okay, so the signals haven't been triggered over here, but I'm looking to see if the exponential moving averages push down. I'm looking to see if the stochastic pushes down, and if it pushes down and moves into the lower quintile, that would be sort of in line with the lower rates. If the dollar is coming down, then potentially some sort of bounce in euro pound. Let's just take a look at euro pound, at euro, and then the cable pairing. Okay, just bringing that up, and let's just do so. Just like we said, there is probably some sort of cap on the dollar in the near term, potentially some sort of floor on the euro. Okay, if we go through to our daily chart and we're using the zones as some sort of map, okay, well, there is relative strength here, isn't there? It's moved from zone 3, Okay, it's moved from zone 3 into zone 2. That's a relative strength upwards. Okay, that's a movement upwards in euro. Now there's a little bit of red that's presenting itself. So maybe some sort of dip, in the uptrend. Let's go down to the hourly chart. How are we going to measure that? Okay. And the way that we're going to measure that is we're going to look at the support levels. Well, obviously central pivot is the support level, but it does look just like R1 seems like the more compelling resistance for the dollar. The S1 looks as the more compelling support. Nevertheless, central pivot S1 are the levels that perhaps we look at first. And the idea here is don't predict, react. Okay, we need to see a bullish cross in the EMAs. We need to see a bullish cross in stochastic. And if we see that, we want the stochastic to move to the upper quintile. If and only if those things happen, then we're starting to align with that dip in the real yield. So we're sort of holding up a base case and then moving outwards from the yield, taking a look at the instruments. Let's take a look at cable. Okay, just bringing that up. I just want to look at the calendar as well for today. All right, pound US dollar should come up. All right, let's take a look at this from the top down. Hey, my face, okay, that's excellent, thank you. I'm just looking at the calendar, just no real red items that I can see. Okay, we've just got some Fed speakers. 7 p.m. Wada speaks, 9 p.m. Kashkari speaks at ZA time, so it would be 6 p.m. UK and 8 p.m. UK respectively. Let's take a look at cable. Just like we said, there is a potential cap on the US dollar, a potential floor on the euro, perhaps a potential floor on the cable pairing as well. If we take a look at the daily chart, here's the map. Okay, we've moved from zone 3, that's the bearish, into zone 2, that's neutral. From bearish into neutral, well, that's a relative step forward. It's a relative step forward. And the idea here is that if there's a relative step forward, well, look, here's some red that's starting to manifest, maybe a dip in the uptrend. If it is the dip in the uptrend, then we can take a look at the central pivot to see if that holds. Otherwise, S1, which looks again perhaps a little bit more compelling. Indra just saying, is CPI coming out this week? The answer to your question is yes. CPI is coming out this week. It's coming out tomorrow. It's coming out 2:30 p.m. ZA, which will be 1:30 p.m. UK. So that's tomorrow, but nothing sort of that I could see for today that is sort of a screaming calendar event. President Lagarde is speaking at some stage today, but there's no real time for that. There's a panel that is going to be part of, I'm not sure that's going to be market moving. All right, so we've looked at euro, we've looked at pound. Let's take a look at oil because of the escalations in the Middle East. Let's take a look at gold, see what's happening on that side. Let's just take a look at oil first. I'll take a look at it in terms of Brent crude. All right, and here is the first reaction. So this would be when the oil market opened. This is actually a gap. Okay, this is actually a gap. And then it's stabilized around about 87. I think that to take a look at oil, I mean, obviously the risk here of escalation in terms of the conflict moving broader to embroil Iran could affect the oil price. Yeah, but if you take a look at this just in terms of the weekly, I think last week downwards candle, that demand destruction we spoke about last week, I think that dominates. Okay, that's we've got a calendar, James. FXCM. Just go to Google, type in FXCM calendar. You'll find the events. Okay, so there is, I think, more of an influence from last week on oil. So yes, it did spike up because of the weekend events, but I think that there is still a dominant candle from last week. Let's take a look at gold. Okay, and we've got lower peak, lower trough, lower peak, lower trough. Again, because the dollar has a potential cap, we've got a potential floor on gold. There was some movements. Let's just clear this up. Yesterday, in terms of gold being a safe haven, there is a relative strength move here, just like we saw on the euro and the cable chart. It's moved from zone 3 into zone 2. Okay, so I think there is some sort of bid for gold here. And again, we'll go down to the hourly just to see if it's possible to time that. Go down to the hourly, and the obvious support levels to keep an eye on, I think, again, central pivot S1. Okay, so these are the levels that, and you don't want to predict. I want to just stress that there's no prediction, it's reaction. Okay, to see when the indicators start moving, and when they start moving, then does the stochastic make its way through to the 80 plus area. All right, just two more charts. Let's take a look at NASDAQ, and then we'll look at DAX just to end off. NASDAQ being a very sensitive to rates, and rates have been coming down. And you can see that, again, we have moved from zone 3 into zone 2 over the last 2 trading days. In fact, the NASDAQ's looking the most bullish of all the daily charts we've looked at. It's pushed above 50. And we are in the upper quintile. As long as we hold that upper quintile, I think there could be a bounce here of the NASDAQ. The fundamental behind that is what's going to happen with the yields. If we see yields carrying on being pushed down, I think that is a tailwind for NASDAQ. If there is some sort of evolution or escalation, I beg your pardon, in terms of the Middle East conflict, and we see rates sort of moving up, that's going to be a headwind on NASDAQ. And it's just gone top of the hour now, so the DAX is going to have opened. Let's just see how DAX is tracking on its open. Okay, and interestingly, it's not quite, when I say it, I'm talking about DAX, not quite as bullish as NASDAQ. It's still struggling to get from zone 3 into zone 2. So that relative strength movement is absent from DAX. But we do have some support. You can see that buying tail, the buying tail on yesterday's candle. If you go through to the H1, which is the hourly, the support level here is obvious to see. Let's just put an arrow here so you can see. And we marked this support level a few sessions back. Okay, so here would be support level 1, support level 2, 3, 4, 5, 6, 7, 8. So it hits it, you know, sort of very broadly 8 times. And what's happening now is that the DAX is showing some signs of strength. You've got the EMAs that have moved into a bullish zone, a bullish formation with the green 5-hour above the orange 10-hour. You can see that the stochastic has crossed bullishly, and we've got the stochastic in the upper quintile. So I would suggest that it does look like it's a risk on start to the day. It looks as if there's a risk on start to the day. We've got to be very careful. The first hour is difficult to get a true bead because a lot of orders are being filled. A lot of limit orders are being filled, a lot of algorithms are kicking in, and then it kind of settles. But it does look as if there is a underlying bullish momentum there. So again, just to reiterate, yields down, that seems to suggest more of a risk on day. Just be very careful with the risk management and the stop losses. We are in a high risk market. There's high uncertainty. Uncertainty is risk. Be very careful out there. Okay. Any other questions? James, did you find that calendar? Just well, let me send you a link here for another one. All right, James. There we go. All right, guys. Thank you very much. No comments coming in. We'll end here. Thank you very much for joining me this morning. Have a great day ahead. Join me for tomorrow. Tomorrow we'll also have that extra webinar. We'll have the Crypto Minute. Have a great day ahead, guys. Cheers.